Hello and welcome to another episode of The War in the Market. Well, the facts for today, the Nifty was down about 1.15%. Mid and small cap index were down a little under 1%. Micro cap index was about 1.4% negative. The advanced decline ratio was very much in favor of declines, with about only 660 stocks rising but 2,200 stocks falling today. So again, a red day for the markets. What caused this market fall today? Well, in addition to the continuing Gulf tensions with oil remaining at $105, there was another bad news today, which is the way the market assumed the INFI results today. The INFI guidance, they lowered the guidance today, and there was no specific AI related reassurance. So the whole IT sector, as I've been repeatedly talking over the past week, just one single bellwether makes a very negative or a positive view in that sector for the day. And today IT was the sufferer, 5.3% down, just the Nifty IT index. Well, I will do a separate session on the IT sector probably tomorrow. But suffice to say that if the IT sector had remained flat today, the Nifty would have still been down, but only about 40 basis points. So 73 basis points of the fall of the Nifty was caused by the IT index. So that was the bad news. But that doesn't explain the whole market fall, because if 2,200 stocks have fallen today, clearly there is some other cause, and the cause for that can be seen that FIIs suddenly today sold 9,000 crores. You see, over the last week, the pattern has been very broadly, roughly 1,000 crores plus or minus, and yesterday they took a step towards 4,000 crores of selling. Today they doubled it to 8,800 crores. So what caused this nervousness in the FIIs? Well, we'll discuss that in a bit, but if you look at the sentiment that shows from the action in the F&O side. So today, both the long short ratios and the put call ratios indicate a heavily bearish trend. When I last saw it, the long short ratio was at about 18:82. Okay, so from yesterday, it's a significant worsening, and I think the put call ratio has also dropped to 0.72, a very bearish indicator. So clearly, that is what caused. The second cause was also the sharp weakening of the rupee today. It crossed the 94 barrier, and it was 94.15 or something. So a combination of all these factors, high oil, weakening rupee, IT sector's underperformance because of the weak guidance by Infosys, and FIS selling. All of them, of course, they all roll into each other, but these are the combined things. The DIS did their best today after slowly rising to net flows positive yesterday. They doubled it to almost 4,400 crores today. They tried to buy some of the stocks as clarity is emerging on the earnings season, but it was not enough to stop the fall. So clearly, over the weekend now, again, there's conflicting news. Mr. Trump's side saying that he has given authority to fire on small vessels which are trying to cross the Hormuz Strait. At the same time, there's a low-level delegation headed to Pakistan for talks. So you get a lot of these news. So obviously, it's too early to take a call about what will happen on Monday. So I'll try and cover that in my weekly review. But until then, right, it's clear that the earnings season is going to be very volatile for the markets, because as big companies report, the whole sector is tending to rise or fall. So it makes sense to again not predict sectors, stick to diversified, and don't put all your money in one go. Keep investing small amounts through this as we wait and expect for better clarity around both the war situation and the earnings situation. Thank you, and look forward to my next update.